Would you take it as an opportunity or a warning in terms of what stocks are doing today?
Well, one day does not a market make, but I get your point, Mike. We had been adding risk back to our portfolios in June, and then about a week and a half ago, 2 weeks ago, I can't remember anymore. We cautioned our clients not to throw money in indiscriminately, not to chase the rally, and we gave ourselves that same advice. But then I also think that this can be an opportunity. If we get some sustained volatility to the downside, I think you want to go in and add to those high quality names run by great management teams that have pricing power. You've heard it from everyone: dividend growth, reliable earnings growth, because we will slow down, and we think we will be in recession in the first half of next year. And so the market's going to shift then to the companies that can deliver reliable earnings. And by that, I mean, just take a look at Palo Alto Networks, this report that just came in this week. I mean, this is a company that raised guidance and beat on just about every metric. So you really want to pick your spots. That happens to be a stock that's in our 12 best ideas portfolio, but there are plenty of others that are going to provide an opportunity, because we think this is going to chop around for some time.
Well, let's hear Fed Chair Jay Powell. He said this morning in his speech at Jackson Hole that higher interest rates will persist for some time and more pain is ahead.
While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain.
So, Nancy, in this way, Powell has been casting the fight against inflation as, in fact, the populist way to help the overall economy and the average consumer out there. And that way, it's sort of like, look, the political kind of popular point 2 years ago was getting unemployment down as far as possible. Now it's you have to slay inflation. On the other hand, just this morning, we got a pretty welcome decline in the PCE core number. It seems as if there's some of the leading indicators of inflation look like they're going in the right direction. Is there a risk of getting a little too negative about the inflation outlook based on Powell's warnings?
Yes. I mean, if you look at the economy, the PMIs have rolled over, supplier delivery times have improved, which indicates the supply chain is loosening up and unclogging. You've got new orders down, prices paid down. And then we did see this core PCE number that the Fed likes to look at that improved somewhat. I think one of the things that the market's struggling with is, and I do believe in redemption, but he has made a series of mistakes ever since he joined as Fed chair, starting with October of 2018. That was his first bear market when he spoke rather loosely about how long he was going to raise rates. And then again last year, ignoring inflation, insisting it was transitory, with a laser beam focus on the labor market, all the while the federal government was supplementing benefits for people not to work. So I think this is why the market tends to overreact in the very near term and then recalibrates as time goes by. I don't think he said anything new. And the Fed members have been saying all of this for the previous 2 weeks. So I liked the shortened speech and the lack of taking questions, but I don't think there's a lot of new information there. The economy is slowing. The bond market's telling us we're going into recession, and that is a fact. And so the Fed has to be very careful as they hike from here, not to really add exponentially to the downside in the economy.
We do have the Dow down more than 900, S&P down more than 3%. We've now worked ourselves into a point where 50 versus 75 basis points in September somehow seems like it's crucial, even though it might not have before. 50 is going to feel like, a dovish move.
Right. Yeah, I think that's right. And that's why I think on just the day-to-day basis, you really can't draw too many conclusions. I think you mentioned earlier in the segment that it is a midterm election year, and I think Tony was dead on, and we've been saying the same thing. How hawkish is the Fed going to sound after the September rate hike? I don't think so very much. And let's not forget QT. Quantitative tightening is going to double to $90 billion rolling off the balance sheet in September. There are people who have estimated that the decrease in the balance sheet's worth 1 to 4.5% in rate hikes. Strong dollar is also a tightening financial condition. So I'm not convinced that we're going to see unrelenting rate hikes for the next 6 to 9 months.